Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. I will also be ceasing coverage on several names as well. Check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. In the last video on the 13th of October, I expected rebounds in the Euro-Swiss to end in rejections. Now this is what has happened. Euro-Swiss's advances over here, starting from the 14th of October, were rejected by the cloud resistances here as well as here. And the ultimate rejection resulted in a decline back below the 20-day simple moving average, and it is headed back lower. So this symmetrical triangle initially was completed on the 10th of October in a bearish direction. The textbook target remains at 0.9068. So it's still bearish for the Euro-Swiss. In the video on the 17th of November, I said that $CNH is still bullish from a head and shoulders bottom, a bullish pattern. The textbook target is at 7.3114. This target was reached on the 3rd of December. I will continue to cover $CNH because I now suspect that it is forming a bullish pattern, a rising wedge. So a rising wedge is a bullish pattern that requires completion via a breakdown below the support trend line. The last price action bounced off the support trend line, so I'm not surprised to see $CNH moving higher in the next week or so before getting rejected by the resistance trend line and to decline again. In any case, a bearish case will only prevail once there is a breakdown below the support trend line, and once that's happened, the textbook target is at 7.1352. I noted in the video on the 10th of November that $Yen was forming and nearing completion of a rising wedge, a bearish pattern. This bearish pattern was completed eventually on the 21st of November, and $Yen has since then fallen and arguably closed within the cloud again. So this usually suggests further downside going forward, and I will stay bearish on $Yen. The textbook target resulting from this rising wedge is at 143.93. But let's not forget, $Yen, I have said before, it is also forming a bearish pattern on the weekly chart. Let me switch this to a weekly view, and you can see that it is potentially forming a head and shoulders top. Now the second shoulder didn't top out where I expected it, just a little higher, but still it is valid as a head and shoulders top. This requires completion via a weekly close below the neckline at 140.25, and the textbook target is much lower from here. But let's see, let's wait out for the daily chart rising wedge to complete itself before attempting the weekly chart. On the Euro Yen, in the video on the 10th of November, I said that it is bearish from a rising wedge similar to the $Yen, and the textbook target is at 160.19. Euro Yen has reached this target on the 22nd of over here, 22nd of November, and this rising wedge is now resolved. But I will also continue to maintain coverage on this cross, because I believe previously in earlier videos I noted that the Euro Yen is also forming a head and shoulders top similar to the $Yen. So the second shoulder is very well formed. It is already trading below the Ichimoku cloud on the weekly chart, so a bearish bearish bias prevails. What is required to complete this bearish pattern is a weekly close below the neckline at 154.41. And once this happens, we have a bearish confirmation. We will have a bearish confirmation. The textbook target is at 133.41, which is much lower from here. In the video on the 10th of November, I noted that Kiwi Yen is forming an ascending triangle and its outlook will be determined by the direction of the break. Kiwi Yen broke down from the triangle and confirmed a bearish outlook on the 15th of November. And since then, it has extended its decline to below the Ichimoku cloud. It is now in bearish territory, and I believe there is still ways to go, because the textbook target is at 82.22. But do not forget, after pattern completions, it is quite common to get a rebound in the form of a correction. Such corrections are usually rejected by resistances. Currently, I believe it's at the Ichimoku cloud resistance around 89.32 or at the 20-day simple moving average before resuming the downside. So rebounds, do not be surprised. They should be viewed as corrections before getting rejected to resume the downside. In the last video on the 10th of November, I said that the US 10-year government bond yield has completed a rising wedge, a bearish pattern, and the textbook target is at 4.029%. I believe at this current level, it has reached more than 60% of the textbook target and remains on track for further downside. So stay bearish on the US 10-year yield, textbook target 4.029%. I have been saying to not give up on Disney since the first video on the 30th of June, highlighting that this stock could turn into a bullish pattern. Disney over here expectedly fell and rebounded to form the second shoulder of a head and shoulders bottom, a bullish pattern. Now that it is trading above the Ichimoku cloud, a bullish bias has definitely prevailed. Still, as I've been saying, this bullish pattern will only be considered complete if there is a weekly close above the neckline at 124.8. If this happens, the textbook target is at 171.06. As noted in the last video on the 17th of November, Totalenergies is bearish due to a head and shoulders top. The textbook target is at 45.95. I expect Totalenergies to be higher in the coming weeks as a correction that commonly occurs after pattern completions. Also, if you would look at the latest weekly price action, it has extended below the lower Bollinger, which usually triggers a 1 to 3 weeks worth of rebound. So a rebound to slightly above the neckline around 57.99 is fine, after which downside is expected to resume once there is some form of a rejection. In the last video on the 10th of November, I said that Swiss yen completed a rising wedge, a bearish pattern, and the textbook target is at 171.32. I will now cease coverage on Swiss yen because it has reached 100% of its textbook target on the 27th of November. I have not updated on the Aussie dollar since the video on the 2nd of September, and clearly this cross has failed to live up to its symmetrical triangle bullish pattern. It has fallen and closed below the support trend line, therefore invalidating this symmetrical triangle. I will now cease coverage on the Aussie dollar. In the video on the 15th of September, I noted that Kiwi dollar completed a double bottom with a textbook target at 0.6573. Unfortunately, Kiwi dollar advanced only to a high of 0.6379 before sliding thereafter, reaching only about 40% of its textbook target, and as such should be considered failure. I will now cease coverage on the Kiwi dollar because very evidently the latest drop below the last bottom has invalidated this bullish pattern. I will now cease coverage on the EURSEK. In the video on the 29th of September, I predicted that EURSEK is forming a head and shoulders top, which requires a close below the neckline at 10.99 to complete. Well, EURSEK has yet to complete this pattern, but it also has yet to invalidate this pattern. Seeing that price action has not developed into completion and after dragging for so long, I believe that this pattern is no longer valid and I will no longer pursue this bearish pattern. I will now cease coverage on the dollar index because the rising wedge bearish pattern that I identified in the last video on the 10th of November has been invalidated over here. So even though I still think the DXY is turning bearish simply because it has closed back below the 20-day moving average, I am no longer able to follow this bearish pattern to pursue this bearish outlook. Moving on to equities, I will now cease coverage on BMW. Price action has rallied after forming a downside exhaustion candlestick over here and may have more upside to go. The double top had a textbook target at 61.48 and BMW fell to a low of around 65.26. A little over 80% of the textbook target was reached, and I believe this should be viewed as a successful pattern. Another successful name is Tesla. I noted in the video on the 10th of November that Tesla completed its head and shoulders bottom and the textbook target is at 393.82. This is one of the rare cases in which there was no correction after pattern completion. Tesla just rallied further and is already reaching 100% of its target. I will consider this a success and cease coverage on Tesla. I will now cease coverage on Costco. I said in the last video on the 13th of October that it may be forming a rising wedge. Well, Costco has invalidated this rising wedge via a breakout over here above the resistance trend line. I will cease coverage on British American Tobacco. The head and shoulders top that identified on 27th of October was invalidated very quickly, which is good. And it may be forming a double top over here, but I'll wait for several more days of decline before deciding to start coverage. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.